as the Japa syndrome, which impacted local firms and startups adversely. Not surprisingly, the year saw global investment in fintech sector dropping from $157 billion to about $78 billion as investors sought better returns to align with inflationary pressures and wider global dynamics. However, the year-on-year drop in Nigeria was just $100 million, from $1.3 billion to $1.2 billion in about 189 deals. An indication that while we're still an investment destination, as long as we keep developing solutions that meet people's needs, we cannot be complacent. Nigeria also continues to top the list in Africa, followed by South Africa, Egypt, and of course, Kenya as top investment destinations. So, what does 2023 hold? At the slight risk of crystal gazing, we can see the dampening of job vacancies with the ongoing layoffs from big, small, and medium techs. This is, however, a fantastic opportunity for astute firms to source and retain great talent from the increasing pool and propel their innovation and growth ambitions. Governance will be at the fore of progressive fintechs, and it is clear that those that will scale and prosper must now double up their efforts to introduce world-class governance, risk, and compliance management structures into the core of the operations to provide the appropriate levels of investor confidence and regulatory alignment. Attracting funding will become more competitive as investors no longer seek market share, but revenue growth and profitable business models that scale up nicely. Bringing it back home, fintechs and innovators have a perfect opportunity to leverage the current disequilibrium in the marketplace by taking cashless disruptions to the very last mile, a feat that has clearly eluded us as a nation till now, and recent currency changes reveals the huge opportunities that remain in this space for creative innovators and problem solvers. The e-Naira platform, the Afrigo card also represent massive innovation opportunities for our fintechs to profile innovative and profitable solutions, not just for Africa's largest market, but seek to exploit these beyond our shores. We also know the finance bill, which makes provision for taxes and digital assets, FCCP registration of digital lending players, which FintechNGR played a part in, and of course, NIB's new platform for BVM validation, I agree, to facilitate consent management and data compliance while promoting financial inclusion. We expect that the verticals in InsurTech, AgriTech, Health Tech, EdTech, PropTech, and Co. will also witness new initiatives and growth in 2023. I am also pleased to inform you that FintechNGR will be supporting the National Insurance Commission, NICOM, in creating the FinTech roadmap for the insurance industry. And the initiative is being led by our variable Vice President, Stanley Jacobs, with participation from both NICOM and FintechNGR members. All these initiatives imply that 2023 should be one to look forward to in anticipation of great things in the industry. FintechNGR will continue to support the ecosystem to thrive and to ensure the success of the entire ecosystem. Our objective to connect, accelerate, advocate will continue to guide how we engage stakeholders, especially regulators and government agencies. Our newly constituted committee of fintech CEOs will also deepen our advocacy stance. We are optimistic that 2023 will deliver new initiatives and innovations based on the strategic plan that GovCo will be rolling out shortly. It is our hope that Nigeria will also birth a couple of new unicorns in 2023. In addition to the 2023 Outlook event today, FintechNGR has lined up various activities to enrich the community and further the purpose of the fintech ecosystem. This includes our quarterly social meets. The first one will take place in March, our intercontinental webinar in Q2, the Nigeria FinTech Week, and the Platinum FinTech Awards in Q3 and Q4, the quarterly Regulator Forum, where we interact with regulators. We'll also be releasing a few thought leadership articles and hosting webinars on topical fintech issues in the course of the year. Without much ado, let me hand you over to our distinguished panelists, and I'm positive that the Director of Payment Services Department, Mr. Musu Jemo, will also set the tone for an exciting session today. I thank all panelists and everyone here for joining us and look forward to an exciting session as well as Wishing you a prosperous 2023. Thank you and have a nice, happy afternoon.
Yes, thank you very much, sir, for setting the tone on a very high level. And without further ado, I'm pleased to also bring on board Mr. Jimoh Musa Itopa, the Director PSMD at the Central Bank, who will also be giving us the regulatory outlook for 2023. Yeah, welcome on board, sir.
Yeah, good afternoon.
Good afternoon, sir.
Good afternoon. Okay, so can I go ahead with my...
Yes, please. It's your turn, sir.
Okay, thank you very much. I'd like to thank everyone here for inviting me to this occasion of your 2023, FinTech Outlook. It's my pleasure to always be among the industry eggheads. Every time I hear that FinTechs operators are gathering, I like to be a part of it because I know I'm going to learn one or two things, and that will help us in driving the policy formulation at the central bank. And so I'm glad to also share this afternoon with you. It's always a very good time to have this kind of conversation because technology changes. Our payment system landscape changes. There are so many things that are happening, at a time. And so a lot of initiatives are coming up, and the entire terrain is getting more expanded because of the incursion of different participants. So it is my pleasure, therefore, to be in this forum. I'm speaking on behalf of the CBN. So we are in the most auspicious time in the country to critically review opportunities and evaluate the risk and consider policies to foster enabling environment for further advancing innovative digital solutions in the challenges in the financial service sector. As regulator, our perspective maybe is slightly different from what the operator sees, but all in all, we are working together symbiotically to grow the ecosystem. It is gratifying that Fintech Association of Nigeria has assembled eminent speakers to dissect the issues and project into the future with a view to aiding the market, operators, and regulators to dimension solutions. And as I always tell my colleagues in the office, that anytime FintechNGR is having any session, it is basically about finding solutions to the myriads of problems that we have. And in some cases, even going ahead of the market realities to provide solutions that we may need in times to come. Indeed, the digital financial service ecosystem has evolved rapidly in the last decade with a potpourri of new operators. Several operators have joined. This year alone, we've given licenses to more than 30 fintech operators. And so many institutions are joining to provide digital financial services. And it delights us to open the terrain, to widen the market so that competition and competitiveness will bring about innovation and ultimately bring down cost. So, and this is happening not just for Nigerians, even foreign companies are coming to Nigeria, to take license, basically to add to the digital financial services being offered in Nigeria. The market has evolved and become very competitive. Policy and regulations have also been addressed towards the evolution to ensure effective management of risk while not inhibiting innovation. There is this general saying that, anywhere you see a regulator, it is basically to inhibit innovation. It is basically to pull you back. And I always share with, my friends that the essence of the regulator is basically to propel you into innovations. We're basically asking you to watch before you move, because this is the only way you can get to a safe place. Yet we face challenges in a renewal of infrastructure to build resilience, efficiency, and safety in the payment system and the financial system as a whole. So, ladies and gentlemen, We have done very well to get us here. And I'm always very proud, every time Nigeria is speaking in the committee of other nations, every time we go out of this country and we present our own stories and narrative, people always dove their hats for us. We've done very well in this country. But the challenge lies in defining tomorrow by strategic action that today requires. The clear and present danger is about the resilience of the infrastructure, especially at a time when the cashless policy is being vigorously championed. Many Nigerians who had hitherto not used electronic payments have resorted to it, and the supporting systems are fast reaching their limits. The current Naira redesign is a testimony to this. More people are adopting electronic form of payment, and therefore transaction volume, will grow. And it means our system has to be resilient enough to stand the pressure. The torrent, transactions that will be happening within our infrastructure should not weigh down the existing infrastructure. So this is time for us to up our antes in providing infrastructure that can stand, the anticipated volume of electronic transaction. It is time to think through the options on how to nimbly extend the rails and open more rails. The Central Bank of Nigeria, in the light of this, introduced the eNaira. eNaira is one of the products that Central Bank also rolled out in 2021 as an alternative rail for the retail electronic payment system. The Nigerian National Domestic Card Scheme, which was introduced just about 2 weeks ago to further create more options and expand the capability of the instruction to serve more Nigerians who are coming on board newly. The national card, the Afrigo, is basically the Nigerian brand. It's our brand, and we have to be proud of it. It basically, strengthens our sovereignty. We have come to a maturity level where we can run, our own domestic card system. The clarion call, therefore, is for the markets to also evolve solutions for refreshing the digital payment infrastructure. Increasingly, in recent times, the telecommunication infrastructure, which is the backbone on which digital solutions rely, also has to be rejigged. We can't run electronic payment system without telecommunication infrastructure. Our interoperability is only strengthened when systems are able to connect, and they can only connect through telecommunication infrastructure. So we also, whilst we are expanding and providing redundancies for our system, we also need to work with our other sister agencies to make sure that they provide resilience telecommunication infrastructure. Ladies and gentlemen, we have to address our minds to the demands for enhanced efficiency in the provision of financial services. It's high time we started looking at some of those challenges that will deter people from conducting electronic transactions. The customers are more aware and more demanding. They are more sophisticated now. They know what they want. And so we have to provide solutions that are customized and tailored, to their needs. And we can only sustain the ecosystem by serving them right. If you don't give them solutions and financial services that they need, then they will run away and they will never use it. So it is important that operators become nimbler and more innovative towards enhancing the efficiency of their services. The customers will not help judge security, convenience, and efficiency. Rather, they demand all at the same time. They just want everything. They want a system where they are secured. They want a system that is very convenient, and they want a system that is always up and running, very efficient, and also very cost effective. They want all, and they're not going to negotiate it. This is the situation we find ourselves. So your resourcefulness as operators will determine how you appropriate the opportunities that are available. I cannot conclude this page without also addressing our minds to risk management in the world of digital financial services. Managing risk is very, very important because there is no better way to engender trust in the payment system, in the financial system, other than guarantee your customers that they are safe. You no longer manage the risk facing you. The customers also expect that you manage the risk he or she faces in the usage of the services. So everything is being pushed to your end. While you curtail the internal issues, you also have to manage the risk that the customer faces while using your services and your products. We must therefore take advantage of emerging technology for not just the extension of novel products, but also deploy those technologies to manage risk. So risk management is very, very key. And I am sure that part of the discussions today will focus on how we can manage risk, and which will ultimately engender trust and increase adoption of our products and services. Therefore, cyber attack remains a challenge, while money laundering remains an issue that we must all watch. The matter of cross-border competition and implication for risk management is right. These issues will continue to challenge us into the future, and we need to address them effectively. I do not despair that we have solutions in light of the array of credible speakers lined up today. I know we have all our eggheads lined up today, and they are the professionals that will actually deal with the issues at hand. But once again, while I enjoy that, as we have these discussions, at the end of the day, CBN should be provided whatever resolutions, whatever recommendations that we think can move the industry forward. We should have a copy. This will help us in our policy formulation, in understanding the market better and the behavior of the customers and even the operators. I therefore once again congratulate FinTech Association of Nigeria for this assemblage. The central bank is both a listening and a learning regulator, as you have known. We don't just wake up and roll out regulations. We actually share with the public. We engage the stakeholders to have their input and to have a better understanding of what the behavior of other stakeholders are. And so we are a listening and a learning regulator. We are forthright about our responsibilities, but value collaboration is the evolving solution to present matters. I therefore look forward to implementable and sustainable ideas, which I believe will be the outcome of this today's discussion. I wish you a very engaging deliberation. Thank you very much. Good afternoon.
Thank you very much, sir. We're very glad to have you on the call. And I know you raised very critical points. Mr. Bajoma had also raised earlier. The issue of risk management is very, very key. And corporate governance has to be deepened as well. And rest assured that the outcomes of this interaction will be something that the central bank will be able to implement in driving next lines of innovation and activity towards making our ecosystem more impactful. Thank you very much, sir, for joining us this afternoon. I'll give the floor now to Lope Omoleyo Shindero. She is the legal and compliance head at branch and the general secretary at the FinTech Association of Nigeria. She will moderate the entire session, featuring those in payment, lending, and across various fintech verticals. Yeah, over to you, Tolu.
Thank you very much, Sheil. Good afternoon, everyone. Thank you again for joining us at this session this afternoon. Thank you to the president for his very insightful remarks. Thank you, for that, just sharing what the FintechNGR plans to do as well. Thank you also to Mr. Musai Topa, just in terms of explaining the CBN's position, how you've engaged with the ecosystem, and how you're also willing to listen to us and also take away some of our conversations here and incorporate that into your own policy and regulations. We're grateful for that, and we also look forward to fruitful engagement with the CBN this year. Without much I would like to get into the session for today. Just in terms of setting setting the scene for the conversation, I'd like to refer to one of the the remarks at the World Economic Forum that recently concluded in January, where the chief economist had mentioned that growth prospects for 2023 remains quite anemic, and there is a risk of global recession. That sort of sounds similar to the IMF's prediction that around a third of the global economy are likely to enter into recession in 2023, and on the basis of that, reduced its growth forecast for for a lot of countries. I think, say for Nigeria, that was revised a few days ago. But it's not all of that. It's not all that gloomy. One of the positive sides is the reports from the Chief Innovation Officer Deutsche Bank, where they had mentioned that innovative technologies will form the basis for stronger long-term economic growth. So while based on the macro and micro economic indications, with innovative technologies and the proper application of those technologies, we might be able to lay the foundation for stronger and longer term economic growth. That's something that we're hoping that we might be able to discuss during the sessions today with our speakers, talking about the trends for they've seen in 2022 based on their own research, their own strategy and thinkings, what they expect to see in 2023 across different sectors, from general startups, lending, investments, blockchain and emerging technology. So I think for everyone, I know we have a mix of audience. So we have founders, we have people that work in traditional organizations that are in the digital transformation journeys. I know we have people that also work in real tech, purely tech startups. But I'm hoping that this session will provide useful insights to you. You'll be able to also recognize what are the trends, what are the opportunities for your companies, for your startups, how to improve your offering, how to improve and strengthen your position this year. What are the partnerships and collaborations that might be useful for you to consider this year. I like something that Mr. Toko had mentioned, that our customers are asking for convenience. They're asking for risk, and they're not willing to negotiate that. So, how do you utilize technology to deliver? What are the things that you need to look at, for you to deliver that sort of service delivery to your customers? Again, we're going to be discussing this across 5 areas today. Some of it will be structured in the form of conversations, while some will be presentations. But in all, I'm hoping that the sessions will be very useful for everyone. So what I will do is do a brief introduction of our speakers, and then we will start with a chat with one of them. So today we have Chinwe Uzoho, who is the Regional Managing Director, West and Central Africa for Network International Payment Services. She's a digital and products innovation expert, and she will be speaking to us on our thoughts and trends and our outlook for the payments industry. We also have Bayo Adesoya, who is the divisional head at AXA Mansard Insurance. He's going to be speaking to us about InsurTech, which is also a vertical that we're really excited and looking forward to in 2023. The president had mentioned that FintechNGR is working with the NICOM on some sort of collaboration and roadmap for InsurTech in Nigeria. So I'm hoping that some of the things that Barry is going to talk to us about today will give us insights into that. We will also be hearing from Mohamed Jega, who is the co-founder of Dominion Blockchain Solutions. His company offers blockchain as a service. I know lots of us have definitely have heard of blockchain, definitely have heard about all the different things that blockchain can be used for, and how it can be used to unlock assets, and how we can use it for information management. You probably already work in a blockchain company, but it's also going to be talking to us about that technology, what it can be, what they're saying, and how it might be useful for us in 2023. We would also be hearing from Daya Demola, who is the Managing Director for Branch International. She oversees the Nigerian West African markets. So Branch is a company that's an SF-based fintech operating out of Nigeria, Kenya, Tanzania, and India. So she's really going to be talking from lending from that perspective, digital lending from that perspective. We'll have Aitoas Kola Oladejo, who's an executive director of the Financial Services Innovators. Again, if you're here, I imagine that you're either working in a fintech or a startup or a financial institution, or in one of the verticals, and you may be a startup, or you may be a startup within an established organization. But she's also going to be talking to us about startups, what they've seen, how to maybe scale yourself, what you need to do in 2023, what are the trends. She's also going to be presenting to us on that. We will also have Richmond Bassi, who is a co-founder and chief executive officer at Bamboo. So one of their mission is to democratize local and foreign investment opportunities across Africa. He's going to be talking to us about investment. I'm sure a lot of people will be interested, in hearing what he has to say around investments, given the different, economic, forecast for 2023. That'd be interesting to hear. Last but not least, we'll have Dr. Suye Salako, who is the co-founder of Partners AIL, an InsurTech company. Again, we'll be having a chat with himself and Bayo on insurance in Nigeria. So without taking any more of your time, I'd like to start the conversation this afternoon with Chinwe. Is Chinwe here? Hi, Shumin.
Yes. Hi, I'm good. How are you today?
I'm very well, thank you. Good afternoon, and thank you for joining us today.
Thank you very much, and thank you for having me as well.
Yeah, yes. So I think first thing we'd like to hear about would be let's look at 2022. How was the payment sector in 2022? I like myself, and I think a lot of people we refer to the payment sector as the poster child for fintech in across the world. So it'd be interesting to hear from your views how it fared in 2022.
Yeah, well, 2022 has been an amazing year. Obviously, it's the year we just came out of the COVID, right? So there were a lot of learnings from what happened in the COVID, how people were able to adjust. I mean, COVID didn't come with a manual, so nobody expected what was going to happen with respect to the payment sector, with respect to the e-business, with respect to e-commerce. But then it was amazing how the world was able to change with respect to having to ensure that even with the COVID, a lot of things started happening, So 2022 was a huge revolution in the payment sector across Nigeria and Africa. It witnessed the rise of fintech startups, especially in Nigeria and other African countries. Currently in Nigeria, there are over 100 fintechs that are registered in Nigeria today. And then we saw the rise of unicorns like Flutterwave and OPay. And of course, there was this cryptocurrency and blockchain, wave in 2022, which completely changed the way people viewed payment system. I keep telling people, I said, 2022 was a dramatic shift in how people pay for goods and services, with electronic payments increasingly displacing cash, and then people now becoming more interested, in learning different digital ways of making payment, digital currency emerging as an alternative to the traditional conception of money. Globally, looking at it, it was a boom industry. All of a sudden, fintech became the buzzword. Everywhere you open is fintech, fintech, fintech. And then there was this attraction for people to invest in fintech, in financial services sectors, because everybody now realized that there's an opportunity here, maybe as a result of COVID. And there was this leap in moving from traditional payment to e-commerce to e-payment space. So consumers in Africa started to benefit from the alternative payment methods across the continent. Today, everybody started buying online. People knew they could trade just sitting in the comfort of your home, making payments. We started having efficient payment links, and this was as a result of the outcome of COVID-19. And then the fintechs again realized that there was a space in the market for us where there are, unidentified, untapped, business in the payment sector. So today in Nigeria, digital lending is everywhere. On your app, you could just dial a short code, and in a short, space of time, you have the money right there on your phone. So there were a lot of things that happened in the payment industry in 2022, and it's still happening. Again, there was digital verification of, addresses, digital verification of identity. We saw what happened in Nigeria with the NIM, with the BVN and all that. So these are just some of the ways that, the payment industry have changed. Actually, when we talk about payment, it's about being secured, it's about identification, it's about availability, it's about uptime. These are some of the things that, mold the payment, sector. Without all these things, consumers will never be comfortable. But now people are moving gradually to the comfort zone of, having to trust and rely on, different, payment channels to be able to transact, and expand their business as well.
I like, the way you mentioned the aftermath of COVID. So with COVID, there was limited physical interaction, limited dealings with cash, and we all, well, not all of us, a lot of us migrated to, electronic payments, e-commerce, and paying for goods and services online. And when I think about it, like at least for us in Nigeria, 2022 was probably the first full year we had post-COVID. And
Absolutely.
I think that when with that, I probably maybe expected that there would be like a significant change in our model, in our interactions with payments. So much that with, and I'm going to just refer to what's currently happening with the whole Naira redesign and, cash and unavailability of actual cash and the queues in bank and people struggling to make payments, people refusing to accept cash or transfers. So do you think that we didn't maximize the opportunity to sort of really hasten the adoption of digital payments last year? And I ask that because I think maybe if we had, were there missed opportunities for us, for the players in the space last year, such that, at least when the CBN announced all of that, and as we got closer to the deadline, we have found maybe, a more natural and seamless progression to, digital payments options. What are your thoughts, Chinwe?
For me, being in fintech is a gradual thing. I remember back then when we started credit card in Nigeria, there was a lot of resistance. People didn't know what it was to do credit card. They didn't even understand the payment cycle of credit card, So it's a gradual thing. Are we there now? No, we are not. But are we going to get there someday? Yes, we will. And like I said, there are a lot of things that drive, digital payments. The platform has to be secured. There must be availability. There must be uptime and an identification. Today, we have moved from not having any form of identification to a place where we now have a form of identification. So these things are being fused together. If you want to get a SIM card today, the first thing they will ask you is that, where's your name? You go to the bank, where's your BVN? These are some of the ways that these things are coming together. Part of the problem and challenges we have also in Nigeria is, our economic factors and political factors. These things also affect the payment sector. You can't take it away, you understand, and then the policies and regulation also kind of a little bit harsh, both with respect to the financial institution and also on the consumers, right? The banks today are being faced with some harsh, policies, which makes it even more difficult for them. And then some of these things are not even reviewed on how it's going to, affect the consumers like you and I, So, like you said, we woke up and there was COVID and people just had to adjust their life. A lot of people now today trust buying things online to basic food items. You sit in your office and you send somebody a list. You don't know who the person is, and they deliver everything to your house. Meat, blah, 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 blah. And then you cook, you make a transfer and everybody goes, right? So we're even moving closer. There's soft POS. Soft POS is going to take over the market very soon, whereby the entrepreneurs, everybody, you're carrying it right here on your phone. You don't need a physical POS. Your phone now becomes a means of payment. You just tap and go. You understand? And that is what everybody, I was in Spain not too long ago. And the taxi guy, time to pay, he brought out his phone. And I'm like, okay. He looked at my card. He looked at my card and said, it was one of the banks in Nigeria. I don't want to mention the bank. He said, oh, it's tap and go. And he tapped. And I paid for my tax. I'm like, I looked at my card again. I'm like, oh, wow. So this card can really do this. You understand? Okay. So, yeah. And it was my Nigerian card. And I'm like, okay. So I knew that the card was contactless, but I never knew that it was already enabled to do contactless outside the country. Do you understand? And that is where we are going to. Today, we don't have contactless devices, although the cards are already contactless. You understand? So by the time we start having contactless devices, by the time we start having soft POS, where all you need is, your phone, as far as your phone is able to receive payments, that is all you need. So it's a gradual thing, but unfortunately, I'm asking myself, what of the other economic factors that will affect this? The people in the rural areas today, you're talking about the new Naira design. I'm very sure that there are some places in this country where they don't even know about, they've not seen this new Naira at all. They haven't seen it because nobody have taken it down there. So there's a lot of, things that have to be done Today, most things are around LPA, Lagos, Port Harcourt, Abuja. That is where the masses are. That is where everything is in Nigeria in terms of development, economic, everything. So we now have to start thinking of what do we need to do to drive this thing down to the rural areas. How exactly? Do you understand? You know, and then when you look at it, a lot of people prior to now, you and I will feel, oh, digital payment, there's a lot of fraud involved. Yes, there will still be fraud, right? But the more people are aware, some of these things will also be taken care of. You understand? And there will be more awareness and enlightenment. You're surprised. All these people, you know, they don't do cryptocurrency on their phone. They know what it is at their low level. You understand? You know. So those are some of the things. But hopefully, you know, we will be able to get there in the next 5 years. I see that transformation happening. Is a gradual process, but will it happen? Yes, it will happen.
Thank you very much, Chinwe, for that. I mean, totally like the reference to contactless payments, and also just us, you know, taking all of this to the rural areas, you know, driving financial inclusion, making, you know, for actual financial services, real financial services available to the people in the rural area. Thank you very much, Chinwe, for that. We will now be going to, so if you have any questions for Chinwe, please leave them in the chat box. We will take the questions after the presentations from Richmond, Dayo, and Mohammed. But I'll now hand over to Richmond Basi for his presentation.
Hi, thank you very much, Tolu. Good afternoon, everyone. Thank you so much for the opportunity to be here and share some of the insights that we see or we are seeing at Bamboo and how they, you know, matter to retail investing or wealth technology in Nigeria. I'm just going to quickly share my screen so that I can have a quick. Just let me know when you can all see my screen. Can you see my screen?
Yes, I can.
Oh, great, fantastic. So in terms of talking about unearthing trends that we can discuss from investing in Nigeria, investing in Africa, I think, you know, the best thing to do is to look at, you know, our business and be able to see what, you know, what has happened over the last year and be able to come up with like some convictions about what's going on in the market and how we see things moving over this year. The first thing that, you know, comes up when, you know, I started preparing for this and looking at what to share is that the outlook is really bright for retail investing in this part of the world, especially in Nigeria. And it's exciting to see. And when we say the outlook is bright, you know, what are the indices that got us here? The first thing that we saw was very strong participation from, you know, several demographic segments. We saw that through 2022, millennials and Gen Zs created 90% of the new accounts at Bamboo, which is very exciting to see. We see also Gen Xs and Boomers and their participation in, you know, in investing across our user base. Gen Xs have the largest or drive the largest trade values through the year. And we see that typically retail investors want to persevere. They want their money they want to grow their wealth. They want to grow their money despite what's happening with the currencies. Something that we saw is demand in investing remaining strong throughout last year. Now, last year was a very significant year for investing in the public market, especially in the US stock market, because there was a bear market throughout the year, most of the year. But interestingly, despite the bear market, you know, through the entire year, we saw that buying outpaced selling for all quarters in 2022. Means that all, you know, investors and Bamboo users trying to buy stocks and assets outpaced those that were trying to sell their assets throughout the year. Meaning that, you know, people were in panic selling, were in panic dumping their portfolios despite the bear market. And we also saw a spike in funded accounts versus 2021. which was very interesting to observe in a bear market. And then putting these two things together, buying, outpacing, selling, spike in new accounts, it's very clear for us that investors or retail investors aren't slowing down their investing activity despite tough conditions. The changes that we really saw last year with our users was the rise in purchase of ETFs, which is really changes around, behavior, risk, adjustments, the things that people would do and the actions that they would take. What we saw is that ETFs, which are less risky than stocks, or rather gives you a more balanced view, of the market, depending on what you get, became something that was very exciting for our users last year. It became the third most popular security in volume and the fourth in values. It was interesting to see that. And that's very exciting because we think that maybe in a market like what happened last year, there will be reduced conviction in investing, but the opposite is the case, or the data is showing us that the opposite is the case, which is very exciting. It means that there's prospects, for wealth tech in Nigeria, in the country, and even across the continent. These were the odds that were presented in the outgoing year. There was weak performance of African currencies against the dollar. We saw, for example, specifically in Nigeria, a 34% decline in power markets. The year started out with about 560 naira to a dollar and ended with about 750 naira to a dollar. We saw inflation rising consecutively over many months last year to about 21%. And all that affected for us as a business was our trade values. So we saw that trade volumes hadn't reduced in comparison to the previous year, but the values, which is the ability to invest, the sheer devaluation and the macroeconomic climate, what it is really impacting people, the amount of money that people have to invest, the amount of money that people can invest with versus the willingness to invest, because we saw that the volumes didn't reduce. It's just that, in comparison to previous years, why those volumes were getting this amount of value, in 2022, the values were lesser. So that's interesting that against these odds, we're seeing, strong participation. Second thing that becomes important for us as we, look at it is that distribution becomes key. Is that how do we reach and service retail investors across the continent? How do we reach more people? We know that from Bamboo data, the average Gen Z invests about 24,000 naira. The average millennial invests every time they invest, their average investment size is about 75,000 naira. The average Gen X about 882,000 naira, and the boomers about 104,000 naira. And over a period of a year, we see these different investors investing between 3 to 7 times on average. So an average Gen Z would invest 24,000 naira on average between 3 to 7 times over a period of a year. How can we reach more of them? If we know that this is the case and that a lot of the population or a lot of the sample size from the population that we see from Bamboo users have, an appetite to invest despite very, very tough conditions, it becomes important to ask, how do we achieve that? How do we achieve, scale? How does distribution becomes important to be able to reach more people? B2B partnerships become very, very important. Can we work together as financial service operators to be able to serve the market better? Are there things that asset managers can do with banks, or fintechs with telcos? How can we reach, even the market woman that after a day she has made her money and has 100,000 naira that she has in profit and wants to put it away and invest it and keep doing so every day? Can we reach people to be able to invest through their, networks? There's mobile money now in Nigeria. And we hope that becomes a huge part of our financial ecosystem here. But how can we reach more people? What are kind of partnerships that we need to do as financial service operators to be able to, ensure that our markets, we open up our market, we deepen and widen our markets that's presented for us. At Bamboo, this is something that we take very seriously as well. We recently partnered with Kuda Bank with our APIs, because with APIs, we can all have like interoperability where we can take advantage of other financial service providers as distribution partners. Bamboo can distribute for asset managers. We can distribute, to, banking partner or banking users. There can be a sort of collaboration that allows us, have a more robust market. And that becomes important. And the third thing that's an important insight is how, regulator relationships, having constructive regulator relationships, seeing regulators, as partners, seeing regulators as partners versus not. Because we do have the same shared objectives. We want to protect the retail investor. We want to make sure that Nigerians can invest in a safe way, where they are not victims to, advanced scams like, MMM that comes in and everybody, because everybody wants to grow their wealth and they're looking for, what is too good to be true. And then they become victims to things like that. We want that for our, our market. We want to open up the market a little more, and we want to have more retail investor participation. And we know that these are things that technology can achieve, with the right technology, the right operators, the right regulatory environment and climate backing those operators. There's so much that we can do. There's so much of the market that we can open up. And how can we do this? How can we achieve this? Is it through proactively engaging through platforms like this, like the FintechNGR group, reaching out to regulators and making sure that there are platforms where we can have discussions and share data. And that's also an important thing, is sharing insights that operators are garnering, because the only way that we can understand our market is look at the insights within our business as we collaborate these insights and have a way that we can use data to inform the decisions that we make, inform how we develop the market further. It becomes important, and those are things that regulators and data that regulators can use to be able to better do their jobs, because we have the data we can provide to them, to better regulate the market, to better provide policies that can drive our shared objectives. And that's why I'm particularly happy to, with the Nigerian SEC, especially with our category, and the willingness to explore new regulation. Recently the sub-broker license for digital platforms was launched by the Nigerian SEC, which was, really welcoming. That allows, essentially fintech companies like ours to be able to have multiple types of partnerships with different types of operators, specifically brokers. And recently Bamboo was, we got the license approval from the Nigerian SEC for the sub-broker license. And this is exciting, because with that, we can now have, drive B2B partnerships. We can, we can work with different banks. We can work with different asset managers, and have the right type of regulatory cover that allows us, use the technology that we are experts at building to drive the market and drive our shared objectives. So these are the three things that, looking at Bamboo, looking at the wealth tech market, and especially in 2023, coming from 2022, that was a really tough year, into 2023, things that we can look at. Number one is not to despair, is that there is appetite, the retail investors, the market, that people want to invest, even though there's tough regulatory climate, but the demand is there. Number two is how can we then service that demand in very creative ways? Are there partnerships that we can do together to ensure that we can go after that opportunity? And then number three, we want to continue to collaborate with our regulators as partners, so that we can work together towards our shared objectives that we have in the market. Thank you so much. I don't know if there are any questions, and I'm happy to take them.
Thank you very much, Richmond. We'll take the questions after the presentations from Dio. Thank you very much. I was going to summarize your points, but you did a great job of summarizing the points for me. Thank you.
Sure.
So next person that'll be speaking now is Dio Ademola. She's the Chief Executive Officer of Branch International.
Hi, everyone. Thanks to Lou, and thank you all for having me here. I'm just going to take a second to share my screen. Please give me 1 minute. Please let me know when you can see my screen.
Yes. Yes.
Awesome. All right, so thank you. I'm just going to be talking a little briefly about what the lending outlook is for 2023. Okay, great. So I'm just going to take a quick look at what, in my view and in the view of my company, is the lending outlook for 2023. I will just start with a quick overview of who Branch is. So we are a lending first digital bank, effectively. Our wedge product is micro lending, and we now offer a range of products, of other banking products, including wallets, a high yield investment account, bill pay, debit cards, etc. So that's the perspective from which I will be speaking. So in a nutshell, I would say the lending outlook for 2023 is shrinking disbursements, but an opportunity to tighten our belts and emerge stronger. The background for why I would sum up our outlook this way is 2022 was a tough year, particularly in the lending space, and we faced a lot of headwinds in Nigeria. A super challenging operating environment. So, top line inflation was almost at an all-time high for us in Nigeria, ending at about 21% in December 2022. Couple that with, what has been largely termed the venture capital winter. This just basically means that, there was less funding coming into the startup space, particularly with fintech, which, as we know, historically has taken, the largest chunk of funding, in this part of the world over the last several years. And that's just basically because, as Tolu outlined, in her introduction at the beginning, the world is facing, a possible recession. There's high inflation across both developed and developing markets and emerging markets as well. So people are just holding onto their funding a little bit tighter, which obviously means that in the startup space, you have to be more circumspect about how you spend your money. In Nigeria specifically, declining external reserves largely led to a weakening naira. We just heard, we started the year 2022 at the parallel market rate of 500 plus, and we ended the year at 700 plus. And what this basically boils down to is transportation inflation, high energy costs, all of this leading to a higher cost of living, lower disposable income, and therefore rising delinquency. So one thing that we saw across the industry in unsecured lending in 2022 was rising delinquency. And this is just largely because people's ability to repay loans that they have taken was ever shrinking because of this challenging operating environment that I just described. So what that is leading to in 2023, we still have opportunities, but we just need to tighten our belts to remain, keep head above water, remain profitable as an entity, because only a private entity has to be profitable to continue to exist. So we need to tighten our belts and just be a little bit more circumspect in the market. But as always, there are opportunities in the market. We've just heard a lot more about, the Gen Z population, the millennial population, who is pivoting strongly to fintech and to digital financial services, and how there's a largely untapped market there. And this is extremely true in lending. With the last Afina survey, only about 3% of Nigerian adults have ever accessed formal credit, which means that the opportunity remains huge. And therefore, we just need to find a way to work smarter and more securely in this market. Specifically at Branch International, right, we are also an impact-focused organization, but we see our impact mainly in financial sector deepening. I get asked this question a lot, where people are wondering, so what are we do to increase financial inclusion? But not every company, not every fintech is set up to attack that problem head on. We see our impact mainly in financial sector deepening. So even with individuals who are, quote unquote, banked, which just means that they have access to some kind of wallet or savings account or even a checking account of some kind, most of them, the vast majority of them, don't have access to credit, and that's where we come in. Since 2017, we've serviced over 6 million Nigerian users, and we continue to focus on seeing what we can do to continue to impact this underserved population. So in 2023, what to do? First things first, profile our customers better, profile users better, leverage every available technology. Our customer and user profiling is machine learning based. And so our models continue to get smarter and more discerning with every loan that is taken from us, right? So we just need to continue to research and find ways to profile our users better so we can keep our delinquencies to a minimum and therefore have better unit economics. And this just means that, wherever there's room, we continue to experiment, continue to test several models, continue to feed more information into our models so we're able to find the very best users to reach, and also reach more people that, traditional credit is unable to profile it and is unable to reach. The third thing, which, in the latter half of last year and going into this year, we at Branch have gotten much better at, is keeping our cost of funds under control. And this just means that, again, improving our unit economics and improving our ability to lend to our users. And then we also do a lot of work to align our impact goals with our revenue models. So as we try to impact even more users, we have to do so in such a way that impacts our revenue models. So in a nutshell, our outlook for 2023 is our volumes are likely going to shrink versus last year, but our unit economics and therefore profitability are going to be better by miles. And I think this is largely what the entire sort of digital lending space in 2023 is looking at in Nigeria. I do believe that in the coming years, again, these things are cyclical. So in 2024, 2025, I envision those to be largely expansion years. And that's what we're looking forward to and what we're striving towards. And yeah, so thank you very much. That's pretty much the end of my presentation. I've tried to keep it under 8 minutes, and I think I just managed that. I'm happy to take questions later in whatever format we are going to be taking questions. Thank you.
Thank you very much, Daya, for that. I think there's some common theme between your presentation and the conversation with Chinwe, and that was around financial inclusion and what the work that Branch is doing. Chinwe's company as well, they're doing in terms of making financial services available to more people, either in terms of credit or just in terms of payment options. We will now move on to the next presentation that's going to be by Mohammed Jigar. He's the co-founder at Dominium Limited. They offer blockchain as a service, and he's going to be talking about blockchain and emerging technologies. Hi, Mohammed. He was here. He was actually here. Hi, Mohammed, can you hear me?
Yes, I can hear you. Thank you so much for having me today. I'm so excited to speak to this very resourceful community. Very happy to share my own thoughts around blockchain and emerging economy and emerging technology. A lot of speakers have talked about the growth of fintech in 2022. I'm sorry, I don't have a presentation. I like speaking as a thought leader based on my practical experience and what I know and what other people are doing. I just like to share my insight. So a lot of speakers have talked about different areas and expectations and the growth over 50%. And we've seen how well-performing fintech companies in Nigeria are providing quality financial services to customers. And this has become possible because of the advent of new technologies like the AI, machine learning, blockchain, cloud computing, and more. Transferring money and making deposits and loans, just like what she just finished talking about, and credit raising fund has become a very easy process. But the presence of this company has helped create more accessibility, and many SMEs and government agencies, educational institutions, have tremendously benefited from this. And this actually, customers and businesses have been benefited from this fintech services, well known, but it's essential to keep in mind that there's still this considerable percentage of population that actually don't even have a bank account. I know CBN has a data that is there over 60% on the internet, talking about financial inclusion, that they are financially included. But I happen to be one of the, to travel around the country, to be in every nooks and kind of the country over 10 years ago. And I'm seeing that there's a lot of work that needs to be done in terms of that penetration of financial inclusion. We know many Nigerians are gradually opening accounts with this development, and also it's quite hard to fully place the trust in those financial institutions. There's some people which are in a huge percentage that they still don't trust financial solutions. And most of these new platforms need to be somehow a bit vertical for them, because we see that the few of us that are educated, our percentage is very few, and over 200 million Nigerians. We claim that they are because of the use. We can use the data from the downloads from BVN. We can be able to put the metrics and understand that there's a still chunk of number of Nigerians that are not really on this other side. How do we move to bring them on this side? And this is what a lot of these emerging technologies have been able to place, in as much as we know the future is not unless very bright, but it's going to be all doom and gloom for Nigerian startup ecosystem in 2023 because of the increasing number of SMEs that has digitized their businesses operation, and some are doing now because of the new exchange of currency policy. And also we're going to see a new wave of B2B focused founders who are building operational products for smaller merchants and businesses. This is going to allow a lot of bring a peer-to-peer approach around this. So because these days you see young people like online payment method for their convenience and speed. There's referral one way or the other, and these new techniques are growing and bringing confidence and also acceptance in that area. But there's this promising development in the fact that many women are quite receptive to fintech solutions, right? Because I've done a set of research with Athena and co, and I've seen to see how we can be able to encourage women participation and women financial inclusion. We've done different hackathons to encourage that, because a lot of women are in the space. So that has really given us an understanding so that how we can also look at the consumer lending sector, the payment sector, which has benefited most, and even the cross-border transaction are on the rise. So we can see it on the other perspective of the use of blockchain, which has actually steadily increased over the past of years. And we've seen the indices, how Nigeria is already leading, and everyone who hears about blockchain, he thinks about crypto. And that's one part of it. And we've seen how a lot of Nigerians are doing transactions peer-to-peer, both inbound and outbound, within and out of this country, and the huge transactions are not remitted and all not captured in the system, which actually has been looking at steadily increasing over the past few years due to the fact that blockchain is reliably to store data and secure manner, and also conduct a trustworthy transaction without the need of a third party to act as an intermediary, because that's one of the major elements of blockchain. And we look at it as, that's why at Domino, we're looking at how best do we implement as a means of simplifying business procedures to cut down that fraudulent activity. Because when you hear blockchain, you should hear trust, you should hear transparency, you should have that confidence that this transaction is going to really cut down the issue of fraudulent activity and also enhance the quality of service they provide to their customers. So one of the things we're looking at in our blockchain-based platform, it has been gaining traction among business and consumers to see how we can be able to expect to lead it into the wider acceptance of the future. There's a collaboration we're doing with FusePay and a major fintech company in the Middle East and Saudi to see how we can be able to integrate the API as a service solution that we've launched to help us bring together businesses on a B2B solution, aggregate fintechs and also merchants and banks onto different layers so that they can be able to communicate with each other. You can be able to move money across border, and as well, you can be able to switch accounts irrespective of your location or region. And this collaborative project has also, it's involved AI power bots, which is giving customers to access cloud-based tools and simply help them to manage their account from any place. And we do with that application programming interface as an API interface. And this is going to make it possible for a lot of e-commerce as well as credit card to track orders and clients and what has to do. But this is actually on the international space. But we need to look at how best do we build on this in terms of that, given that Nigerian economy is that of best in Africa. And it should come as no surprise that API as a service and payment gateways are crucial components of this financial transaction. And you see, despite the merit and solution available in the fintech world, access to products and services remain uneven because interoperability is where different systems and applications communicate with each other without effort to the end user. And this interoperability fintech system, which currently we're hitting in the Guinea-Conakry, to see how we can be able to launch it. We have 3 different countries we're looking at now to implement. I don't want to mention names much, but that has been a very good game changer because the interoperability fintech system, it offers a feature of greater financial inclusion. And I'm seeing this as a very big win for Nigeria, which is the biggest market in the fintech space and the leader in the fintech space to be able to adopt it. And we can look at it as in terms of quickening the space of operation and lowering costs for both businesses and customers. And what I will say is that we need to do a lot in terms of increase in education, because as electronic transactions is growing in Nigeria, there's further transactions integrity which need to be captured in terms of that. A lot of people, as I mentioned earlier, don't have confidence in that. The few that have confidence in it are doing it. You and I and other people are enjoying it, but we want an all-inclusive platform that will bring everybody on board, that will integrate everybody on board, that will also help everybody to be able to utilize each product at the comfort of its zone. We've seen the integration of those emerging technologies, which AppZone and FusePay are doing on that phase, but we need to see more of this happening in the integration of blockchain, which Domino is happy to advise and recommend. And we're happy to work closely with the FinTech Association of Nigeria to do a lot in terms of sensitization and education about the capabilities of blockchain to the community, to the FinTech community, to understand the mechanics of blockchain, how blockchain can help businesses, how blockchain can help the financial sector, because there's a lot that can be achieved in terms of that. Part of our vision at Domino is to help government and businesses transition from traditional data to blockchain data. But we understand there's a lot of might around blockchain. There's a need for us to take the bold step to educate people to understand the various potentials of blockchain. And I'm happy with the collaboration we're doing with the Ministry of Communication and Digital Economy and NIDA, training over 30,000 Nigerians to educate them about blockchain capabilities and what it entails. This actually has given a lot of confidence because in various government initiatives that they've launched, this is one of the few projects that has attracted a lot. The target was 3,000 initially. The government scaled it up to 30,000. When we put up the call for participation, over 100,000 people registered for that training because it's free. So that shows the appetite for learning blockchain. And most of the participants are not young people. Some are directors, some are people from the security agencies, some are people from the bank, lecturers, PAMSECs. And this is really encouraging for us to do more in terms of education around blockchain and also help sensitize that. So we want to see how best we collaborate with the FinTech Association to help banks and businesses, because it will not be very good for us to do things at offshore, not bring it back to our home country to showcase. Thank you so much.
Thank you very much, Mohammed. That was very useful. Again, something else that struck out, well, that stuck with me based on something else that Richmond had said. So he was talking about distribution, and then he mentioned partnerships, partnerships even within the financial services sector. And then you also mentioned B2B partnerships. And I think that's something that, some people some of our participants also need to, think about, and also, consider, what partnerships do you need, and what collaborations do you need, and do you need to work on, in 2023, even as we think about optimizing your service offerings. Thank you again, Mohammed. I think that I'm just going to check if we have questions that have not been answered in the okay, so we have some questions here that have been answered. So if you had any question in the chat box, please check. I think some of our panelists have also graciously responded to the questions as well. So there's a question on whether we have any platform for dollar naira transactions directly online. I'm not. Let me just see. So would you actually, are you still on?
Yes, I am.
Actually,
yes, I am.
No, not sure.
Okay.
I'll check the.
Yeah, I'm here. I'm right here.
Yeah, someone's asking a question around whether we have platforms to do dollar naira transactions directly online. I mean, aside from your bank or authorized transactions. I don't know if it's something you'd like to throw some light on.
Okay, so like we all know, Nigeria is a heavily regulated market in terms of our foreign exchange transactions. Prior to now, you could use your card, either your Naira, debit card, your Naira credit card, or your dollar credit card to do transactions online, and you get debited and all that. And before now, if you use your Naira credit card, you could also pay back. You could use your Naira credit card to do transactions in dollar. But unfortunately, since last year, this has been regulated by the Central Bank of Nigeria with respect to what the banks are allowed for you to do on your card. So it's regulation. It's not about the platform. It's a payment link. So you go to Amazon and you buy something, and you go to the payment link, you enter your card details, and then you pay. So what happens is that the transaction comes straight, goes through the scheme, is okay, goes through your processor, is okay, goes back to your bank and debits you. So, but when there's a restriction in terms of the amount that you can do online with respect to your dollar transaction, then there's nothing anybody can do. So there's nothing like a platform. So it's actually a payment engine, that enables you to do these transactions either on any website or any place you want to do e-commerce transaction. So, but what happens now is that for people who have dollar cards, who you have a dollar card, like maybe you can do those transactions online. Nobody's stopping you. Do you understand? Because it's taking dollar to dollar and all that. So it's taking exactly what is in your account, and you're using that to pay as well. So it's like you're spending the money you have. So asking if there's a platform where you can do dollar transaction, there's nothing like a platform. It's actually a payment engine that enables you to use your cards to make, those international spend on your card. So that is what happens, so maybe I'll need to correct that, because when people say platform, there are different things about platform, about payment engine, but I'm not going to go into that details because, we are not here to describe that. So, and I've just given an example of going to an Amazon platform, an Amazon website or platform. So Amazon has a platform and an e-commerce platform where you want to make payment. So when you finish your shopping, it tells you go and pay. Once you click on that, it takes you to a payment engine, which is at the back end, which you don't see. So that payment engine or pay by link or whatever, it's what enables the transaction to go through in terms of payment. That takes it from your card to your scheme. Your scheme could either be Visa, MasterCard, or Amex or whatever scheme your card is, and then takes it to your processor, who checks it, takes it to your bank, who checks and then not authorizes the transaction. So that is what happens. But when there's a limit to how much you can spend, then you cannot do above that limit that has been set either by your bank or as set by regulators, because when these transactions happen outside the country, we are obligated as a country and as a bank to be able to settle those transactions in dollars. And when you don't have the foreign exchange to settle those transactions, then it will not go through. So that's exactly what is happening. You understand? So I think I don't know if I've explained it enough for the person that asked the question.
I hope that your response, addresses some of the question that the person had, just in terms of the regulatory limits around just being able to do some of these things, and banks and fintechs and operators sort of have to work within the regulatory requirements that are applicable. Richmond, I don't know if you're still here. There's a question around, someone wants you to explain the sub-broker license, what it allows you to do and what it covers. I don't know if you would like to take that, or if you.
Yes, sure. No, absolutely. I can do that. The sub-broker license basically is a license that allows fintech companies to be able to have relationships with multiple brokers within the Nigerian markets, the Nigerian capital markets. It means that as a fintech company that primarily uses technology for your operations, you can have technology relationships, you can have relationships with brokers and offer them services that you provide through your technology to be able to help them extend their reach, their distribution, and such services. And we're very excited that we got that, and we have a lot of plans this year to do just that, to extend relationships, to use partnerships, B2B partnerships, to extend the services that we offer to more of the population.
Thanks, Richmond. I'm excited for you on the license as well. So we have a question. I don't know if Mr. Jimo Sofa can help us with this, with this question. So someone's asked what efforts are being made to ensure that CBN see potential in fintech as against seeing them as a threat. I can partly answer that question on his behalf based on his presentation, but I wonder if you'd just like to respond, just share what CBN currently does and how you're working with the ecosystem.
Sorry, can you repeat the question again? I didn't hear you very well.
Okay, so what efforts are being made to ensure CBN see potential in fintech as against seeing them as a threat?
Is that a question? Because if it's a question, then it's very shocking. We've never seen fintech as a threat. We actually have been encouraging fintech development in Nigeria. And as you know, 10 years back from now, we didn't have this number of fintechs that we have today. We've given licenses to a lot of fintechs that have grown to be unicorns in Nigeria. We've also opened the terrain. We recognize their contribution to the extent that we provide regulatory environment that will drive their growth and expansion. So just about a year ago, we started the project of regulatory sandbox. And the objective basically is to allow the fintechs have access to a lot of Rails and API to test their innovative ideas without taking license from CBN. So no financial commitment, no stringent requirements, and all of that. We've also, brought about the regulations on open banking, basically providing another opportunity for them to integrate with banks, leverage on the account information that they hold to provide financial services, to their customers. So all in all, CBN has been driving adoption of electronic payment, encouraging fintechs, which in our own palace, we call them the payment service providers. Well, depending on whichever suits you, they are all same. And so it's, we've never had a situation. This is the first time I am hearing that, CBN sees fintech as a threat. Right. The reason I'm here today, this is a fintech forum, right? The reason I'm here today is because we collaborate with fintech, and that's why I'm here.
Yeah. So. Yeah. I was going to hold brief on your behalf and say that you certainly don't think or relate with fintechs as a threat. Just even from the various regulatory engagements that we've had, from the FintechNGR and even from our professional relationship with the Central Bank of Nigeria, from the regulations, invitations to comment on your policies and your regulations. It's always been a door. We have a regulators forum at FintechNGR, which is also a meeting where operators, founders, and our fintech community get to engage with CBN. So that's not been our experience, but it was just useful for you to speak on this. Thank you very much, sir. I think we can take just one more question before we go to the next section. Okay. How do you see the integration of artificial intelligence and machine impacting the growth and innovation of implementation in the industry? This is a rather long question. I don't know if Mohammed will be willing to help us with this question. So how do you see the integration of artificial intelligence and machine learning impacting the growth and innovation of fintech in Nigeria in the next 5 years?
Sorry, I think you were breaking, but I heard artificial intelligence.
Yes. So the question is, how do you see the integration of artificial intelligence and machine learning? How do you see it's impacting the growth and innovation of fintech in Nigeria in the next 5 years?
It's going to impact massively. What I want to make it very clear is that Nigerians are very intelligent people, and we have one of the best startups in Africa. We're leading even cross-border, and as well as I know there's a lot of things around. So many fintechs are utilizing AI and also different channels, right? Web3, and to see how they can be able to do that. It's part of the emerging technologies, and that a lot of people are very sensitive. A lot of fintech founders are sensitive about this, and they've started integrating it in different platforms. I don't want to mention names because a lot of them is going to really help grow and also help in terms of payments, in terms of also giving report and accessibility, as well as organizing data of them. And this is going to really help in terms of even the regulators, because once the regulators ask for a certain information, the players can be able to, within the click of a button, give them and tell them where they're having issues and what needs to be done to be able to fill this gap, and how we would need to address this other parts. So AI, blockchain, and what's it called, has come to stay. Machine learning, they've all come to stay, and they are going to really help us in terms of different layers. There's a lot of fintechs playing in other parts of the world already implementing such solutions in the UK and other developing countries. And Nigerians are very keen, their eyes are there. They keep their eyes on the ball, and they're leveraging and learning from those, and they will soon implement that. And that is going to really help us really escalate that. That's why I mentioned the gap we have in terms of financial inclusion. I believe the emerging technologies is going to really help us in terms of filling those gaps and getting more customer acquisition solutions for those fintechs and financial solutions. And I'm happy the banks and the fintechs are collaborating keenly. And this is actually a big win for the country. And we want to see more of this happening, this collaboration, as well as with the industry and as well as the regulators. So industry, regulator, and players are all working together for a certain purpose. That is a big win for the country.
Thank you very much, Mohammed.
You're most welcome.
So we've come to the end of the first session. I'd like to thank you very much to a very brilliant and esteemed speakers. I think my own takeaway from the session is that the outlook is bright. We should be, there's definitely a need to work on improving financial inclusion. You should also be thinking about B2B collaborations and partnerships. We should expect to see improvements and new things and innovations in our payment systems and payment offerings. And generally, the outlook is bright, and I hope that's useful for our participants. We will now go to our second session, And we will start this with a presentation from Aitwa's Kola Oladejo. She's a director at the Financial Services Innovation. She'll be talking to us about startups.
Good afternoon, Tolu.
Good afternoon.
Good afternoon, everyone. Thank you for having me. So I'd just like to first of all appreciate FintechNGR for putting this program together. I think I started from the beginning of the session, and we've had very rich discussions today. And so we're just taking it to another level. Allow me to share my screen. Can you see my screen?
Yes.
Okay, so we're talking about startup skill, and my approach will be a bit different from what we have so far. So according to Mass Challenge, this is as at March 2022, 75% of startups fail. These are the top 3 reasons why startups fail. The first one is no market need. The second one is they run out of cash. And the third one is not the right thing. Something very interesting to note today is that because of this cash crunch, it's very clear to us as Nigerians and as fintechs, as practitioners in the ecosystem, that a whole lot needs to be done to digitize the informal sector. A lot of businesses are cash dependent. A lot of individuals are cash dependent. A lot of sectors are cash dependent. And of course, when you follow the news, you can see what's going on and all of that. So a whole lot needs to be done. And that's where the startup ecosystem, the tech startup ecosystem, and the system of innovators come to bear. And I think they have a lot to play. Let me just talk a little bit about FSI. FSI was set up to enhance financial innovation in Nigeria and as well empower startups in the ecosystem, empowering them with mentorship, empowering them with regulation, pointing them to the regulations because we comply with the regulations of any sector, CBN regulation or any other regulator, as long as you are doing something in the insurance space or you're doing anything in the pension space, we ensure that you comply with those regulations. And we put together the first fintech innovation sandbox in Africa. We have about 16 partners currently, and a good number of startups create products using the APIs on our sandbox. I'm also happy that it's been taken further because CBN as well has launched the regulatory sandbox. So once you finish in the innovation sandbox, right, and you have done a POC, you can take that to the regulatory sandbox to showcase to CBN if you have the wherewithal to go ahead and get a license. So we're talking about scalability, startup scale. And then there are so many definitions to scalability, really. But what I would just say is any startup trying to scale is trying to grow, but growing using the least resources. According to CFI, Corporate Finance Institute, scalability is the ability of an entity to withstand pressure that comes as a result of growth, right? Without being hindered by its resources or structure. And that's where you see some people feel customers are dissatisfied, their technology is not scalable, they didn't plan for the sudden surge. Yes, the failure rate increases. So just imagine you use Google today. Every time you try to do a search on Google, it's not available. What happens? You go to Bing or some other search engine, right? That's what will happen. And so that's why technology resilience, as far as you're a startup, these are some of the things that you would consider. All of these things, yes, for Corporate Finance Institute. I just rephrased what was said, okay? A scalable startup is one that begins with an innovative and lucrative idea. So their ideas that are just for social impact. But if you're going to be a scalable startup, it means that you're going to generate revenue. It means that you're going to be a profitable venture, right? And so you also be looking at your business model. How profitable is that business model and how does it sit within the ecosystem? So it includes entering a large market and creating a niche for the company's products. We've listened to several startups, companies, let me not call them startups, companies this afternoon rather. And you can see you have people playing in the wealth space, people playing in the lending space, people playing in the insurance space, right? All of them have found their niche and they have also found their customers. The third one is very interesting. It says that innovative startups do not only create a product for the industry they play in, but they also create their industry for others to introduce products. And I think I find that very interesting. And that's when you become a unicorn, really. When everyone or every institution or every player across the globe is leveraging on what you have built and created. Look at Amazon. People are leveraging on Amazon. You can liken Amazon to a palm tree where the birds come to lay their nests, right? Look at Facebook, for instance, and there are several of them out there in the market. Okay, let's go on. So for a startup to scale, the very first thing you need to do is to establish product market fit. And that's when you consider your buyer's personnel. That's when you are able to connect with your market. Yeah, you have done some research and you feel that, oh, this is the idea I have, but until you take it to the market, right? You can't take it to the bank. You have to be sure that there's a need, there's a problem, there's a void that you want to fill. Your value proposition also is very clear. One startup investor, Mark Andreessen, said something. He said, being in a good market with a product that can satisfy that market. So you can be in a market and you don't have a product that can satisfy that market. And in product development, you also have to consider the sentiments of the buyers or the sentiments of the market. There was a study that was done by the Hart School of Business, and it talked about product development. There's a village that had no water. And people go to the stream, they go in the morning and come back in the evening. The women go in the morning, they come back in the evening to get water, right? And so imagine the loss of time, and we hear startups talk about efficiency, faster, customer satisfaction. But they later discovered that the villagers, particularly the women that go to the stream, were not excited about the borehole that they sunk within the village. And from further study, further inquiry, discovered that they took away the social interactions of the women. That's when they had their free time. That's when they interact with their friends. That's when they gossip. They didn't have that much time back in the village. So that brings me back to the point of product market fit. Are you considering the buyer's personnel in entirety? Does your product really fit into the market? So it's also about building the right product to satisfy the needs of the customer. I just said so. In establishing your product market fit before you start thinking about scaling, there has to be an enabling environment. So FSI has also created that enabling environment. I'm so happy CBN is doing a lot also in that regard, right? For startups or innovators to conduct a proof of concept. And let me use the layman's language. So take, for instance, a lady goes to a hairdressing salon and she learns how to make hair, and put it that way. And then she learns with a dog. That's what usually happens, right? And the dog has no feelings. And then her first customer walks in, a human being, and then she touches his hair and the person says, it's paining me. And then she pours water and says, water is cold. See, the experience is different. The dog doesn't complain. So you will have thought, oh, I'm very good, because you have tried it on the dog. But when you're trying it on a human being, the experience is different. That's what a POC will do for you. You go to the marketplace to validate that the product features you currently have, which we call a minimum viable product, is actually satisfying the needs of people in the market. And we also need an enabling environment for the pilot phase. So when you test your products with a larger market. For a business to scale, for a startup to scale, the very first thing I think you should do is to establish product market fit. Very important. The second thing I would say is, and from my experience in FSI, what I also preach is to collaborate. We've heard it today, B2B partnerships. And taking a cue from even the financial industry in Nigeria, right? InterSwitch today that we celebrate as a unicorn. All the banks came together and created InterSwitch. So the struggles you see of startups today, right, in the markets, no food to eat, they barely have an office, they barely have capital. I dare say that InterSwitch didn't go through that process, right? Because the banks funded InterSwitch. NIBSS NIPS, the same thing, the banks funded NIPS. Now let's look at the newer startups like Flutterwave, for instance. Access Bank gave Flutterwave access to markets. That collaboration helped Flutterwave to scale very quickly. PiggyVest today also partnered with UBA at the time where they launched. So it's good to start from a place of knowledge, except you have all of the money in the world to go full-fledged. But when you start a business, you start at a small scale. You test your idea. You have a lot of iterations until you find an established market that needs you. And when you find an established market, there's customer retention, there's customer loyalty. People come back time and time again. And then you have people referring customers to you. One of the things collaboration will do for you, apart from giving access to markets, it will help you reduce your cost of operations. And I use the word collaboration deliberately. We see some kinds of collaborations in the marketplace today, unfortunately, that attempts to swallow up the smaller business is no longer a collaboration. I don't know if maybe it's like an acquisition. As long as both parties are fine with it, there's no problem with acquisition. But when we say collaboration, and I think that the incumbents are also, some of them are becoming open to collaborating, right, with the innovators or the startups, because they may not necessarily have the wherewithal to sit down, to do the research, to see the problems. If I am on the street, for instance, I see the challenges on the streets. You, that you're an established business, you may not see the challenges of a downfall driver, for instance, and in that ecosystem, because that's not where you play, and you're doing a lot of things already. But somebody who is an innovator, who goes to the motor park, most likely will see the challenges and also come up with a solution. So collaboration also will give access to technical assistance and other resources. And that's why when startups go through accelerator programs, their ideas are refined, and then it's easier for them to attract receive funding. The third thing here is for startups to scale also is they require access to funds. And this is where I think that the Nigerian market needs to do a lot more, right? In terms of intervention, if you look at the Nigeria Startup Act, it's stated there that some startups will have access to grants, right? I know it will be implemented, hopefully, in 2023, just like we have many acts, and then you wait and hope. I also saw that in the Startup Act, there will be tax incentives, ease of doing business. Today, it's easier to just register your company, CAC, and all of that. So there's a need for the startup intervention funds. There's a need for shared infrastructure. And what I advise startups, you shouldn't try to build everything. Look at the beautiful story of Uber and Google Maps, for instance. The Uber driver uses the Uber app that leverages on Google Maps. So we're in the world of open APIs, right? And they do a whole lot with that. If you talk about ChatGPT, it's open API that has led to that. We're in the world of open finance. All of these are important. Yes, and right now, there's this advent of co-location spaces. Just imagine you have innovation labs in tertiary institutions. You can imagine the kind of infrastructure they are putting in place for students, especially those studying computer science, to just go in and test APIs. We're doing that with students currently on our sandbox, and it's amazing. The results we see are amazing. Their thinking pattern is different. The kind of products that they come up with, where they were like, wow, this is very, very interesting. As against a student going through a tertiary institution and he does not own a PC or does not have access to a PC. Access to angel investors networks is something else that I think we have seen that over time. And the truth is, a good number of them find their way around the states, right? So last year, I think there was the startups in Africa, Nigeria and other parts of Africa raised about $4.85 billion. A lot of money was raised. We're going to see, apart from venture capital firms, start seeing peer-to-peer lending platforms. I spoke with a startup in the lending space quite recently, and I said to her, okay, you have traction. Are you trying to raise money as in equity? She said, oh no, she's looking at debentures, she's looking at bonds rather, so that's what she was looking at, right? And then she's trying to spread her risk. So she's not under the pressure of one venture capital firm breathing down her neck that the ROI is not as good as they expect. So for the startup, my startup outlook for 2023, I say that I see partnerships with incumbent players, and a good number of even financial institutions are open to partnering with them. However, I think that the CBN and other regulators should do something about IP rights, protecting the IP rights of these innovators. Offering products as APIs embedded in existing markets. I think that's one way to scale. So I challenge startups. Yeah, you have a product, you hold it to your chest. This is my first invention and all of that. How about offering it as an API? I walked into a shop. I just saw auto finance available here, and I was just curious to find out, And when I got there, it's a car shop, but they have partnered with I think a finance company, and they were giving auto loans. Of course, they will scale using the least resources because they're not leveraging on their staff, right? They're not leveraging, they're not marketing anything. That company is marketing it, and it's a win-win for both of them. The advent of crowdfunding platforms. I know one or two startups that have raised pre-seed from other countries, from Europe, right? Leveraging on the crowdfunding platforms, and not equity, by the way. These reward platforms, as long as they're able to describe their idea, their innovation, and so they get some pre-seed funding. We'll likely see mergers of fintech companies for startups merging with financial institutions. It may likely happen in 2023. I've seen some startups give up on their idea, and they say to me, is there anybody that wants to buy it? They give up. Why? Before they have internet access, transportation to get to where they are going to, even if they're going to a co-location space and all of that. So some of these challenges around support, capital, infrastructure are real challenges in the marketplace that can be addressed as an ecosystem, right? Or individuals who, through their CSR, corporate organizations through their CSR, will intend to address that. There will be the advent of new business models from new and innovative startups. The cash crunch has thrown up a lot of opportunities already, especially in the informal space. So I believe that there'll be new business models. That will be incremental. I will not say disrupt. I like to use that word very carefully, disrupt, but we coexist with existing solutions. And then we know about the talent crunch, the jackpot mode. Even startups lost talents. Maybe your tech person working with you as a co-founder resigned, and then it's like you're back to square one. Some are talking to the third developer to help them build a solution. So there's an opportunity for the development and management of tech talents, and it's one of the initiatives that at FSI we've taken up. Thank you. I'll be happy to answer questions if there are any.
Thank you very much, Aitor. I really enjoyed your presentation. Again, I see that you mentioned collaboration and partnerships. So that's definitely, I think everyone has, mentioned collaborations and partnerships. I like the idea, of you watching out for embedded finance. Again, that's also something I imagine that maybe when we're taking the last session, something that we will mention, and just in terms of collaborating or merging financial services products with the other verticals in the space. I think that's something that will be useful. We will take questions after the next session, so please would let you know if you have any questions that have been posed to you. I'd now like to invite Bayo Adesoya and Dr. Tunde Salako for a discussion on InsurTech. Hi, Bayo.
Hi, Tolulope. Can you hear me and see me?
I can hear you. Can't see you.
Okay,
Hi, Dr.
video is
Salako. I
on.
can see you. Okay, yes, I can see you both now. Hi, good afternoon.
Good afternoon.
Okay. Hi, good afternoon.
Hi, Bayo. Good to see you.
How are you? Sorry, go on, Tolulope. Sorry.
Sure, no worries. So I'm particularly interested in InsurTech and this conversation because you may also have heard it, and I've heard a few people say that insurance has sort of the last of the verticals that, just in terms of picking up the financial or digital financial transformation. So you've seen fintechs, you've seen payments and all of that, but InsurTech just seems to have caught up, the way the other verticals have. And I'd like to hear your views on that, especially thinking through, the last couple of years and more recently 2022. I'll start with you, Bayo, and then Dr. Salako can also respond to the question.
Okay, thanks, Tolulope. Perhaps I can just quickly start before I jump into the question. Just to acknowledge the great job that I think everybody involved in this program is doing, from the Secretariat, the association, Tolulope, yourself, all the speakers, as well as everyone who's attending, almost 200 attendees. So, it's a lovely way to start the year, and hopefully we all gain or realize the potential that I think we've all been talking about, so far. On the insurance side, maybe to just quickly give a view, like everyone has said, there have been reasons, there have been events over the past 5 years, that have impacted on the global economy. But insurance is still big business. About $7 trillion worth of gross premiums were written in 2000 and last year, essentially, and it could have been, some argue, maybe even a whole lot more, maybe another $1 trillion more. In Africa, we reached a value of about just under $76 billion, in gross written premiums in 2021. This is expected to hit about 115.9 billion in 2027. So there's a lot of room or growth potential in there. And you have players like MTech, services in Kenya, raising the biggest rate, at least one of the biggest rounds for an InsurTech, about $3 million as well. And coming home, a company like Curacell, who's, they're one of our partners at AXA Mansard, was accepted, the only InsurTech startup accepted into the Y Combinator, for last year. And then, of course, I guess maybe just drilling down a bit more into Nigeria. Overall, we saw continued growth for insurance, with premiums hitting over 500 billion naira, and also about half of that paid out in claims. And NICOM too has done a number of things, but let me pause there. I think we will get into that as we go along. But I just wanted to give a bit of an overview to say that I would say that the sector hasn't done badly, but we all acknowledge in the industry and beyond that there's a lot of room for growth. Thanks.
All right.
Thank you.
Okay, I was just going to lay on what Bayo said. It's succinctly just giving an overview, and piggybacking on that to speak to what Tolu was saying. When we look at it from a global context into Africa, into Nigeria, evidently there's growth, right? When we look at comparing like 2021 and 2022, let me focus on the insurtech funding landscape, since Bayo shared generally on insurance. When we look at 2021, the year closed with about the funding of $15 billion globally. And then for Africa, was about $39.5 million. Specific to Nigeria, it was just something shy of less than $1 million, 950K to be precise. And there were a total of about 15 deals in 2021, and only 2 came from Nigeria, right? Now, when we look at the margins in terms of the funding that came totally to Nigeria, 1.7 billion in 2021, and we look at the percentage of what the insurtech space did, that it's less than 1%, right? But fast forward the hand of time, when we coming into 2022, of course, because of the global slowdown, first of all, total global funding to the space was about $8 billion. Coming to Africa, it increased, right? And that was about $62.5 billion. Now to Nigeria, a large portion of that, about 55%, was $46.25 million. There were 8 deals, and Nigeria led with 5 of those deals. Now, when we look at the funding landscape coming to Nigeria, which dropped to about 1.2 billion in 2022, and we compare that with the margins for what was raised by these 5 startups for the $6.25 million, that's 3.8%. Now, so what am I trying to say? With these figures from a trajectory of less than 1% to 3.8%, just under 1 year, it goes without saying that by the time we get to the end of 2023, there's going to be higher margins, there's going to be higher growth rates, because basically what we need to do is just follow the money. We follow the money trail. Of course, this time around, it might be a little bit different in terms of how much Nigeria is able to amass, because typically what will happen in 2023 is there are certain companies that have done their own pre-seed and seed as of 2019, 2020, 2 of which we're very familiar with, that are going for their Series A and Series B potentially this year. And by the time they amass those funds, it's just going to grow the trajectory further. So the space is evolving very rapidly, and it can only get better. I'll stop there for now.
Okay, I think I'll continue with you, Dr. Salako. So you mentioned this, significant jump in terms of, funding that is coming to the space. What would you say is responsible for, for the growth in the insurtech vertical?
Okay, so to look at it holistically, if we look at on a macro level and also on the micro level, starting from outside, the first thing is one, there's a lot of venture funding and private equity funding that is going around these days. Yes, we heard about a lot of slowing down last year, but if you look at it, some of those
Oh, okay. Hi, Bio.
This meeting is being recorded.
Okay, he's back.
Sorry, I think my network, apologies. Right. So I was saying that, just to quickly wrap up so I don't waste time, if you look at the landscape of that, what happened significantly between 2020 and 2022 is a lot of venture funds and a lot of private equity funds started getting their own deals with an African-focused portfolio to start with, which means that they can potentially invest more, in African innovators that, are pushing the envelope in building new business models and ecosystems. That's on the one side. Now coming, granular from the entrepreneurs and the innovation and innovator side, a lot of solutions are being churned out because of the capabilities to be able to, go agile, use very modern core generational technology with technology stacks that were not available just even 5 years, or let me not say not available, were not accessible to this side of the continent. But because a lot of heavy lifting has been done, we've got people who are doing amazing stuff locally. These solutions are able to be built locally and attract funding, to also edge the risks of the likes of LPs and VCs that are outside the African continent, because they also want to, put their money where their mouth is. They want to diverse, and everybody is saying that Africa is a new kid on the block, right? And it's where to really just focus on with the kind of accelerated growth that is happening. So those will be my two responses to that. Yeah.
Excellent. But I would like to add to that.
Sorry?
Yeah, I just wondered if you'd like to add to that, just in terms of what we can see is responsible for the growth in InsurTech. I think you had started to talk about it during your introduction.
Yes, I mean, I think Tunde has covered it largely, but maybe the only thing I would add to that is just the rate of adoption of technology. Of course, we know that COVID had an impact, right, in essentially speeding up whatever the level of adoption was by maybe 10 times. Of course, in Africa, we've also got a largely youthful population who are increasingly digital natives. So it makes a whole lot of sense, either as an investor or as a service provider, an InsurTech, or as a customer, to leverage technology, to deliver these services. Yeah. So I think that's what I would add on top of everything else that Tunde said.
Okay. So, and I mean, looking forward, looking to 2023, what are the trends that you're expecting? What sort of business models or adoption of technology? So for example, where everyone's talking about, it's now an API economy, for the core fintechs, you could literally start your entire operations without having a core product and just, outsource everything by using other people's APIs. So for the InsurTech space, what are you looking at in 2023?
Okay, so thanks, Olok. The number. So where do we start? Where do I start from? Embedded insurance. Yeah, is going to continue to gain pace. We already have some, but by the way, embedded insurance means essentially, as you were saying, making available your APIs to integrate with third parties, whether you're doing so with a bank or with a telco or with a fintech, but delivering and working with these other providers, to develop solutions that meet the customer's needs. Increasingly into lifestyle coverage. People want to protect their lifestyle and sources of income. So offering, simple products like gadgets, protection for gadgets, for phones, for laptops, and all sorts of other mobile devices is big. Property tech boom, again, there's a lot of innovation in the property space. So it opens up opportunities to provide unusual and not the regular type of products that have probably existed. And a lot of the young demographic that we have now don't really buy into anyway. But lastly, I would also maybe mention motor insurance, where we see increasingly the demand or the need for pay-as-you-go type of insurance. If my car is, just like a colleague, a friend was saying recently, if my car is mostly domiciled on the island, then why are you charging me insurance like anybody else who's maybe even outside of Lagos, etc. So bill me for the area that I live in. And when I go out of that area, then perhaps you want to then charge me something extra for going outside of that, sort of area. If my car is at home, why am I paying insurance when it's not going anywhere? Maybe I've got 2-3 cars and it's only one that goes out, that's in use regularly. So a lot more flexibility, a lot more personalization, and of course, all of this driven by mobile solutions, right? So it has to be accessible. It has to be easy to understand. It has to be bite-sized, and it has to be customized. So those largely are the trends. walking beyond there, if you go back to the providers themselves, increasingly, they're going to leverage on technology, to power their, agents network, for example. Insurance is still largely sold via brokers and a physical, sales team. Granted, they can't be everywhere in the country, right? But it's still a very, very significant part of how
the recording has stopped.
Yeah, of how the industry functions. So increasingly, this physical distribution channel is leveraging increasingly on digital solutions to also be able to do their jobs better. Partnerships, I think, linking that back to embedded insurance, because ecosystem partnerships, just going beyond the usual, the norm. We must and we will find partners that are unusual. There will be conversations about insurance in areas and in industries or sectors that before you would never have heard of it. But if we stand any chance, again on leveraging on all the lovely trends that we've discussed and the opportunities in the market, then this has to happen. Thanks.
Thank you very much, Bad. That's very insightful. Dr. I'll just close the session. If you were to, to say one word for someone in the insurtech space, or a sentence, or something, what would be your word, or what would be your sentence to someone in the insurtech space?
Resilience, right? Because that goes two ways, right? Two ways in the sense that when we look at the entire ecosystem and we're considering the concept of environmental, societal, and governance concerns, the ESG, and when we look at what is going on, both from the macro and microeconomic scale, it's important to factor in resilience into the insurance ecosystem, because that's what will start to translate to building. How do you build models or use cases, through pilots that can help to mitigate very minimal risk or create a situation where there's no risk at all? And that's on the one side. Now, when we look at it on the other side of the situations that an innovator or a startup could be facing, it might take some time to be able to get into bed or partner with an incumbent company. So like for Bayer, for instance, they're doing a lot of heavy stuff on the digital side, but that's a trend that is being set, by companies like Bayer's, right? But it's not all incumbents that are facing and that have that outlook. It's going to take some time, but gradually, I think we'll start to see a lot of large-sized incumbents or insurance companies also trying to see how they can concentrate on how they continue to reduce risk and provide value for their customers, while they focus on outsourcing one specific area of concern to insurtechs. And so in order for that to be able to happen, it takes time. And for other partnerships, like in the startup ecosystem, you could be talking about partnerships for days, weeks. In insurance, you're talking about quarters, years, right? It does take time. So that resilience is important. So I'll stop there.
Thank you very much, Val. Thank you, Dr. Salako. Thank you very much for this session. I'm afraid we would have to bring this to a close now. I want to say thank you very much to all our panelists and speakers, Dr. Salako, Bayo, Aitwaz, Mohammed, Richmond, Dayo, Chinwe. Thank you very much. I'm going to take it also to the audience. I'm going to hand over now to Dr. Jamila so that she can give the closing remarks.
Thank you, Tolu. Thank you, Bayo.
Thank you. Hi, Dr. Jamila, can you hear me?
Oh, hello, can you hear me now?
Yes, yes, we can hear you now.
Very good. Hello, everyone. I just want to say thank you so much for coming and joining us today. On behalf of FinTech Nigeria, our inspiring president, Mr. Adibajimo, all of our dynamic and most generous speakers, which are eggheads, which are finally named by our regulator, Mr. Musa Itopa, Jimo Musa Itopa. Our moderator, you've done a fantastic job. She's a pilot, captain, chief, Tolulope, thank you. And our entire planning committee, I want to extend our heartfelt thanks to all of you, our participants, for joining us for FinTech Outlook 2023. If you enjoyed this webinar and the knowledge that was shared with you today, just know that this is just getting started for 2023. January was full packed with activities for our members. February is already on fire, thanks to our incredible speakers today. And I just want you guys to know that we are looking forward to having you join us. So I have just 3 announcements before we close. And the first one I want to announce is we want you. If you are not yet a member of FinTech Nigeria, I'm not too proud to beg. I just have 5 words for you. What are you waiting for? Join us right now. Go online to FintechNG.org. Join, get involved, because we welcome you. The second announcement, I want you to check out our calendar of events for 2023. There's so many committees and teams that have worked so hard to put together some great activities, and I got a sneak peek for you. In the coming week, we're going to have a webinar in collaboration with Enterprise Nigeria, and it's going to be on CBN's national fintech strategy. Shh, you didn't hear from me, so just look out for it. It's coming soon. Make sure you attend. And lastly, I want to promote just one of our ecosystem shaping projects. It's called DigiQuipped. If you haven't heard about it, just know that FinTech Nigeria is on a mission to equip people with digital skills to help them advance their careers. But we need more help. So we're looking for organizations to work with us to support us in the DigiQuipped training programs. So if you want to know more and you believe you can help, please contact us, info@fintechng.org. And in conclusion, I just want to leave you guys with one quote. It's a favorite quote of mine by Warren Buffett. It says, "Someone is sitting in the shade today because someone planted a tree long ago." This quote is a perfect example of the strength, endurance, and commitment of FinTech Nigeria members. They exert this every day to make Nigeria better for our future. So I want to thank you once again for coming and join FinTech Nigeria if you too are a tree planter. God bless you and enjoy the rest of your day. Thank you.
Thank you, Doctor, for bringing this to a close on area note. We look forward to seeing all of you in our future events. You enjoy the rest.